The options market is really huge. There's about 40 million contracts per day that are traded there. And I call this options to me are like the seasoning on a portfolio. A lot of us might know how to buy stock, but once you buy stock, it's like, well, now what, right? And so with options, you're able to kind of make it even spicier and make your portfolio just right. And you can increase the risk, reduce the risk, whatever it is you choose to do. All right. Now, so typically, in most markets, those who buy options don't usually make money. And this is where I differ a little bit from what you might see online. There's a lot of people online that will talk a lot about buying stock options. And pretty much in many cases, they're kind of talking about gambling. They're basically saying, buy this thing. If the stock goes up, then the price will go up and you're going to make all this money. You're going to make these quick flips. And that's fine. There's nothing wrong with fast money. But remember, making fast money also means you can lose fast money. I'm not a person that thinks that way. I'm more of a conservative sort of investor when it comes to options. I'd rather be on the other side of the transaction, and I'll explain why. So typically, when someone buys options, they're looking for risk. They're putting their money down, just like when you go to the casino, you put your money on black or something like that, or you roll the dice. And the other person that is taking their money is actually getting rid of risk, right? So you think of it like in the casino, you have the gambler and then you have the house, right? The gambler gives money to the house and says, "Here, put my money on black." The house takes their money and says, "Okay, well, good luck. I hope that you win. If you win, we'll pay you," right? And we know that when you look at the relationship between the gambler and the house, who always wins? Does the gambler always win or does the house always win? It's the house, right? The house always wins. So I don't want to be the gambler. I like being the house. So a lot of people talk about buying a lot about buying options. I don't buy a ton of options except for specific circumstances. But what I do is I sell options, right? As the house, you're collecting income. So when I talk about making income from stocks, this is one way to make income from the stocks that you own. All right. So let's keep going. So I don't want to see you taking more risk. I actually think you should consider selling the risk where you reduce your risk and take income instead. Because I know a lot of you are trying to pay bills and trying to make extra money. A lot of you have been savers. Maybe you have some money in your 401k, access to a HELOC, or you have, some stuff sitting there and you've been working and you're looking for ways to add to your income. This is a great way to do that. So I don't buy many stock options. I tend to sell them to other people. I sell them every week. That's how I make the bulk of my money. And so here's the deal. When you talk about this, when you talk about what you're selling, let's look at an example. So let's say the current stock price is $80, right? Now that people own the stock, you might own the stock. The price could go up or it can go down. And you could just hold the stock and hope that it goes up. And if it goes up, then you make money. If it goes down, then you lose money. Well, there are some people who might hold that stock who might sell an option on the stock. And so what you can do is go to the options market, and there may be some people on the other side. These are people that you'll never meet. You don't talk to a person. You can just do this on an app on a phone, and they may believe that in the next week that stock price is going to jump from $80 to $82, right? And so what they might say is, "Hey, look, if this stock goes above 82, I want the right to buy your stock for $82." Now you own the stock. You're the stock owner. You're sitting there with this $80 stock and you don't know what's going to happen. But you want to make some income. So you might say, "Sure, I'll take that bet." And what happens is they pay you for the right to buy your stock from you for $82. And so if the stock goes up past 82, well, then you make more money. You make an extra $2 a share plus the money that you got from selling the option. And then they get to own your stock. You say, "Here's your stock for $82. Good luck with your life." Does that make sense? Tell me if that makes sense. Right? So you're basically allowing a person to pay you money for the right to buy your stock at a price higher than what it is right now. That's not a loss for you. If the stock goes up, then that's not a loss for you. You're just sort of doing what we call in finance, they call that risk sharing, where you're like, "I don't know what's going to happen. I don't want to take all this risk. I'm going to go ahead and sell this option so that somebody else can own a piece of this so that if it goes up, I'll sell it to them for 82 and live happily ever after." All right. So basically, they pay you money to own some of the upside on your stock. And if the stock goes above 82, then you say, "Here's your stock. Give me $82." And you make your money and you walk away. And if it doesn't go above 82, though, you get to keep their money regardless.